PayPal is down 80% from its peak 2 years ago. But does it really mean anything? Maybe it was just massively overpriced, or maybe it is currently a great bargain. Or maybe there is a fundamental problem with the business. Well, let's analyze PayPal and try to find out, is it a great opportunity, or is Kramer right and it is a value trap?
You know, this whole place is going downhill.
Not this Kramer, that Kramer.
I think it's a value trap, frankly.
Let's start by looking at the recent results. Revenue is up by 7.8% year over year. Net income is up by 985.7%. Yeah, let me double check that. Well, it really is almost 1000%, but we'll get back to it. Cash is down by 6.4% and the debt is up by 1.3%. So what happened with income? Well, if the percentage difference between the growth of revenue and the growth of income is so big, then we have to look at the expenses. They spent around 300 million less on marketing, 200 million less on technology and development, and over 100 million less on administration. So they are cutting costs, which seems to be a good idea. But the biggest change is in position called other income/expenses. In June 2022, it was a loss of almost $800 million. And in June this year, it was a gain of $245 million. That is a big difference. And when we dig deeper, we find that most of that other income is attributed to strategic investments. And they are basically investments in companies that PayPal has a significant influence over, but does not control them. So it is not really related to the core business of PayPal. That is why the revenue growth is actually a much better indicator of how the company is doing. If you were to invest $1,000 into PayPal 8 years ago, you could buy around 30 shares. And today, they would be worth around $1,923. So in 8 years, you would gain 92.3%. But in 2021, the same 30 shares were selling for $9,240. One of the main factors for this drop is the growing number of competitors. And of course it is a problem, but let's not forget that PayPal makes 41 million transactions per day and has a 41.9% market share. So they are still the main player in this field, and by some margin. Individual insiders, that is an X. 0.2% of the company is owned by individual insiders, and we would like to see this number over 2%. And are individual insiders buying? That is a check. In the last year, we see only one transaction from individual insiders, and it is a buy transaction worth approximately $2 million by Daniel Schulman, who is the president and the CEO of the company. But not for long. He will step down as the CEO by the end of the year, so some big changes will take place in the near future. And do super investors own this company? That is a check. 5 super investors own this company, including Pat Dorsey, David Rolfe, and David Katz. But what is interesting is that when I analyzed this company almost exactly 1 year ago, there were 9 super investors. So people like Terry Smith, Lee Ainsley, and Thomas Geithner exited this position. And are super investors buying right now? That is a check. They bought in the last quarter 9.8 million shares and sold 138,000 shares. Return on invested capital. That is a check at 11.6% 10-year median returns. And we want to see this number higher than 10%, so that is a decent result. And free cash flow growth, that is a check at 17.1% 10-year compound annual growth rate. And also here we want to see this number over 10%, so that is very nice. And what do we know about net profit margins? It is an X at 14.3%, and the industry average is 14.7%, so they are basically in the middle. They have a healthy margin, but nothing exceptional. And actually the margins are going down because they have to fight with stronger and stronger competitors. And now let's take a look at share buyback. It is a check with 7.6% of the shares bought back in the last 10 years, so that is very nice. And let's take a look at the debt. It is an X. It would take 2.2 years to pay the long-term debt with a 5-year average free cash flow. And we would like it to be less than 2 years. But it is close. It does not look like any major problem. PayPal is not paying any dividends at the current time. And on one hand, we could expect some dividends from such an established company. On the other hand, they can probably use this cash to keep on growing and trying to preserve their dominant position in the market. Price to earnings ratio is 17.9, so nothing crazy. Just for comparison, S&P 500 average is around 23.5. But to properly value it, we will have to estimate the growth of PayPal for the next 10 years, and we will make 3 scenarios of this growth. So, in the low scenario, we will estimate a growth of 10% for the first 5 years and then 8%. In the medium, 13% and then 10%, and in the high scenario, 16% for the first 5 years and then 13% growth. Now, why did I use such estimates? Well, if we look at the 10-year annual growth rates, we see that the revenue went up by 17.1%, free cash flow also went up by 17.1%, and earnings per share went up by 12.3%. So even in the high scenario, we are a little bit conservative. And with such estimates, the intrinsic value in the low scenario is $89, in the medium scenario $107, and in the high scenario $134. But these are not the prices we should be looking for, because we have to always add a margin of safety. I use a 30% one, and that makes me feel comfortable. I can be too optimistic with my estimates and still not get into any serious trouble. So with such a margin, we get in the low scenario $62, in the medium $75, and in the high one $94. And the current price is around $64. So only the low scenario with the margin of safety is in the red. This company looks quite cheap at the moment. There is a lot to like about PayPal. Steady growth over the years, super investors are buying recently, and it has a very interesting price. What is worrying is the fact that the margins are going down, so they don't have the kind of pricing power over the competitors that we would like to see in a strong and resilient company. Also, the change of the CEO creates another unknown in this equation. So for me, it is a mixed situation. But please let me know what are your thoughts about PayPal and its future. I'm really curious. Thanks for watching and see you in the next one.